Last year, one factor drove the real estate market more than any others: rising mortgage rates. Hello and namaskara. This is Jasmine Noronha from Royal Ipit Signature Realty. In March 2022, the Bank of Canada began a series of interest rate hikes to pump the brakes on inflation. And while some market sectors have been slow to respond, the housing market has reacted accordingly. Both the demand and her home prices have softened as primary challenge for buyers has shifted from availability to affordability. And although the higher mortgage rate environment has been a painful adjustment for many Canadians, it should ultimately lead to a stable and sustainable real estate market. So, what can we expect in 2023? Will mortgage rates continue to climb? Could home prices come crashing down? While no one can forecast the future with certainty, here's what several industry experts predict will happen to the Canadian housing market in the coming year. Number one, mortgage rates will eventually stop climbing. Over the course of 2022, we saw the benchmark rate rise at a record pace, a whooping 400 basis points in just 9 months. Fortunately, there are signs that the central bank series of rate hikes may be coming to an end. After the last month's half point rate increase, Bank of Canada officials struck a non committal tone about future rate hikes, prompting economists to speculate that the central bank may pause hiking rates by early spring, if not sooner. According to Stephen Brown, a senior economist at Capital Economics, the central bank is likely to hike rates at least one more time before it shifts gears. We could not rule out a final 25 basis point interest rate hike in January 2023, said Brown in a client note. But the Bank of Canada is very close to the end of its tightening cycle. What impact will this have on mortgage rates? Variable mortgage rates could finally stabilize. However, buyers hoping for a big drop later in the year may be disappointed. Although some market analysts are betting on lower rates, I heard CIBC economist Benjamin Tall speak at a conference that I attended in November last year. He thinks that's unlikely as long as inflation remains a factor. But an important point he made for the real estate industry is to keep an eye on the fixed mortgage rates as they could continue to trend lower as bond yields crumble. But it's also possible that rates on both variable and fixed rate mortgages will climb instead if the inflation sticks high. What does this mean to you? While no one can predict the future of the mortgage rates with certainty, an end to interest rates hike could bring some much needed relief for borrowers. If you have plans to buy a home or renew your mortgage in the coming year, you'll want to weigh your options carefully when deciding between a variable or fixed rate. Reach out for a referral to a mortgage professional who can help you. Now let's come to point number two. Buyers will return to the market. The pace of home sales fell steeply last year as higher mortgage rate price would be buyers out of the market. However, some industry experts predict that Canadian housing market is poised to turn a corner. Although many buyers and sellers are currently in a stalemate over housing prices, market dynamics may shift this spring as more homes go up for sale. There have been a drop in unit sales in GTA, and this has been the steepest on the record in the last decade. The economists project that existing home sales will fall through the first half of 2023 and then reverse course and begin to rise in the third quarter. As soon as we start seeing the stabilization in the mortgage rates, it will bring home buyers back out. Buyers' purchasing power will still be constrained by higher mortgage rates. through as well as by stringent mortgage stress tests for uninsured mortgages and a hefty monthly payment for the insured ones. So, a buyer's ability to participate in the market will depend in part on the sellers willing to negotiate. What does this mean to you? If you're a buyer who has been waiting for conditions to normalize, now may be an ideal time to start your home search. As more buyers begin to enter the market, you'll face steeper competition and reduced negotiation power. And if you delay selling your home, this could be the year to make a move. Number three, home prices will stabilize later this year. GTA home prices have fallen roughly 21% from the peak in Feb 2022, and we have seen them being stable for the past 4 months. There might be still a slight adjustment in the coming months. However, according to the industry experts, the risk of the market to crash is very low. So, what does this mean for you? If it can feel scary to buy a home when there's uncertainty in the market. However, real estate is a long term investment and that has been shown to appreciate over time. And keep in mind that the best bargains are often found in the slower market, like the one we are expecting right now. We are here to guide you. While nation real estate forecast can be a big picture outlook, real estate is local. And as a local market expert, we can guide you through the ins and outs of the market and the issues most likely that impact sales and drive home values in your particular neighborhood. If you're considering buying or selling a home in 2023, contact us now to schedule a free consultation. We'll work with you to develop an action plan